Hey guys, it's Nick, and in this video I want to talk about energy prices, and that means coal, natural gas, and crude oil. Now there's a lot of stories in the news about energy prices all over the world. You got Chinese problems with blackouts and the price of coal. You got Europe where natural gas is skyrocketing and the equivalent price in terms of BTUs is like $230 a barrel of crude oil, basically, for the price of natural gas over in Europe right now. And you have crude oil, which recently was at $80, and a lot of people are forecasting that it's going to be over $100 by this winter. So I'm going to talk a little bit about what's driving these, and are these prices going to continue, and should you buy energy stocks going forward? So let's start this off with a look at what's going on with coal in China. So in the Zero Hedge article, they say Beijing orders energy firms to secure supplies at all costs. Translation: Beijing is no longer willing to risk social anger, and going forward, China will be subsidizing coal and natural gas, which will lead to even higher prices. So this is the change in cumulative thermal power generation through August. You see it is the highest it's ever been. So what's driving all these shortages and blackouts and high prices and all of this stuff in China? Let's take a look. So this is a really good article saying that renewables are driving the energy crisis. So coal hit fresh highs of $231 per metric ton for the November 2021 Rotterdam contract in Europe, which is up 171% so far this year. And so they say several factors have been pushing coal prices up, including tight supply in China as the country vows to achieve emission standards and reach carbon neutrality by 2060. Yeah, I doubt that, but okay. So a lack of mine investment reflecting pressure from socially conscious investors, import constraints due to coronavirus restrictions, and a surge in natural gas prices amid prospects of a shortage in inventories, specifically in Europe. Here's a look at coal production and coal consumption by region, and you see Asia Pacific by far is the largest consumer of coal. And this is a look at coal futures that were just, what, $60 or so in early 2021. Now, coal and natural gas account for almost 52% of the world's primary energy consumption in 2020. So the three of these together, natural gas, coal, and oil, are like 80% of energy consumption by fuel. And hydro and nuclear are another 11% or so. And so the rest are only like 5.7%. Renewables, meaning solar and wind. So why is China having this energy crunch now? Because as the world starts to reopen after the pandemic, demand for Chinese goods is surging, and the factories making them need a lot more power. But in China's northeastern industrial hubs, as winter approaches, and is something that could have implications for the rest of the world, blackouts are not that unusual in the country, but this year a number of factors have contributed to a perfect storm for electricity suppliers. So number one is rules imposed by Beijing as it attempts to make the country carbon neutral by 2060 have seen coal production slow, even as the country still relies on coal for more than half of its power. And as electricity demand has risen, the price of coal has been pushed up. But with the government strictly controlling electricity prices, coal-fired plants are unwilling to operate at a loss, with many drastically reducing their output. So when the government controls the electricity prices and coal gets expensive, what these plants do is say, hey, we're not going to produce any electricity if we're going to lose money. So they all pretend to have maintenance outages so that they don't have to produce at a loss. And this is a perfect example of what happens when the government places price caps on things. You get shortages, because if the people that are producing it are actually losing money when they produce it, then they will stop producing it. So, but last Wednesday, they announced that they would let firms increase prices to reasonably reflect changes in demand, supply, and costs. And maybe to ease some of those problems, here's an article saying China folds, unloads Australian coal despite import ban amid power crunch. And this is Australia coal exports to China, which crashed to zero. This is because Beijing ordered state-owned companies to stop importing Australian coal. So now let's talk about natural gas. For those that don't know, natural gas is known as the widowmaker because so many traders have gone bankrupt trading natural gas because it usually sits around $2 to $4, but every once in a while it has these crazy spikes and a lot of traders go broke shorting it on the way up. And the reason it has these crazy spikes is because natural gas, unlike oil, is very hard to transport and store. So to export natural gas, they have to liquefy it into LNG in these big specially made ships that are cooled for the whole journey. And so a small imbalance in natural gas can move the prices a lot, and a big imbalance could move it really a lot, as we're seeing in Europe. And so here's an article: gas prices in Europe are now the equivalent of $230 oil. And here's a chart of EU and UK natural gas prices and WTI crude. And look at the difference. So what's causing natural gas to skyrocket in the UK and Europe? They say that the UK has a lack of natural gas storage facilities where capacity has been allowed to dwindle in recent years, and supply shortages in coal, gas, and water have all driven energy prices sky high in Europe. And the US gas and coal producers are struggling to keep pace with demand even before the northern hemisphere hits its winter period and heating demand skyrockets. So another reason for high natural gas and coal prices is France, who gets more than 70% of their electricity generation from nuclear power. And nuclear power generation in France fell due to a strike. So now they have to use more natural gas and coal power plants, if they have it, to offset some of this reduction in nuclear power generation. Now, the US produces a lot of natural gas, which they can export to Europe and other places, but they have to change it into liquefied natural gas. And right now, it says that they are at their limit for the time on how much LNG that they can export. So US LNG capacity is not unlimited, currently stands around 10.8 BCF per day. And recently they are operating at 10.31 BCF. All the facilities have recently been operating at or near full capacity. That means the US has reached its limit for the time being in its ability to participate in global LNG markets. And so why is natural gas going up in the US? Part of it is probably what happened last year in Texas. And so this year, a lot more people are including more risk premium into winter natural gas prices. So they are stocking up more and having more power plants online ready in case this is a cold winter. And all the reports I see keep saying that it's going to be a cold winter. I'm not sure how they know this when most forecasters can't tell you if it's going to rain next week. So as winter comes, a lot of people use natural gas to heat their homes, but we also use a lot of natural gas to generate electricity. And so this is the breakdown in the US, and you see natural gas is 40% of electricity generation, while petroleum is only 1%. Coal makes up 19% and nuclear 20%. And renewables is 20%, although most of that is hydroelectric. It's not wind and solar. So another thing helping the LNG prices rise as well on the world markets is Brazil, because 62% of their installed capacity for electricity generation is hydropower. Problem is, they are facing their worst drought in 91 years. So because of this, they're importing a whole lot of LNG. And here's a look at the top destinations for US LNG, and Brazil leads them in the third quarter of 2021. So are natural gas prices going to come down in Europe before the winter hits? Who knows, but the possibility is that they will, because Russia's Nord Stream 2 pipeline is ready and they are already filling it, getting ready for getting it approved to start flowing. However, some Western countries, especially at the US's direction, is trying to get this stopped because the US doesn't want the political and economic power that Russia will get from this, as well as the US wants to sell their own natural gas to Europe. But I think if gas prices stay high enough, the people in Europe are going to be demanding that they get this gas from the Nord Stream 2 pipeline, whether Russia owns it or not. So Russia is saying they are ready to help stabilize the gas market. And this sums it up nicely. EU wants energy independence without nuclear, coal, gas, or oil, and penalizing investment in copper and aluminum. That'll work. So that's the problem. All these countries are wanting to be green and ESG and all this stuff and discouraging oil companies from drilling oil and having new fields and all this stuff. But then they complain when there's not enough oil or energy to meet their needs. And who's going to meet their needs? It's going to be Russia, Saudi Arabia, and China. And what about crude oil? Well, on Monday's meeting with OPEC, they recommended proceeding with a 400,000 barrel a day increase in November. And that was bullish for crude oil, sending Brent above 80 and WTI above 76. And so oil is looking pretty cheap compared to natural gas and coal right now. And so today on Wednesday, oil prices are down because of a surprise build in crude stocks reported by API and some positive headlines from Putin over the EU gas situation, which may remove some upward pressure on oil prices from rotation. And this brokerage analyst said that may signal some daily pullbacks this week, but does not change the underlying bullish case for oil. And just today, the White House said that they are considering releasing emergency reserves and ban exports of oil. So add to that Putin's offering to placate Europe's natural gas pain, which removes a pillar of support for oil from the gas to crude rotation or substitution that they would do. The FT reports that the Energy Secretary has raised the prospect of releasing crude oil from the government's Strategic Petroleum Reserve, declaring that all tools are on the table. And so here, Bob McNally said SPR releases came on the table a nanosecond after Jake Sullivan was rebuffed in Riyadh, and the administration realized shale producers wouldn't be able to increase production quickly enough. And so they also did not rule out a ban on crude oil exports. So guys, that's a little summary of what's going on in the world energy markets. Are these prices going to keep increasing into the winter months? Generally speaking, I think gas is going to come down in Europe, especially with Putin coming online with his Nord Stream gas to save the day. As for China and their coal problems, I'm not really sure about that. If worse gets to worse, they can start importing from Australia again and kind of swallow their pride a little bit. And as for crude oil, I think it's still going to edge up maybe to $100 a barrel within the next year or something along those lines. So I'm still bullish on crude oil myself and oil stocks. And just generally speaking, with what's going on in the world, especially in the US, with printing all this money, that's going to cause inflation. Real things, commodities are bound to go up. So that means oil, gold, natural gas, coal, that kind of thing. As long as countries like the US and UK and countries in Europe are pushing these oil companies to stop drilling and force them to become carbon neutral and all this stuff, that is going to be bad for us and good for countries like Russia, Saudi Arabia, maybe China even, that are not really doing that. And so when we have the shortages because we're not drilling shale, we're not offshore drilling, and then we say, hey, we have no more gas, they are going to step in and be happy to sell it to us at a nice high price. So that's why I'm bullish on the price of oil going forward. And one of the big beneficiaries, I think, is going to be Russia. So if you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching, guys.